Hi, I'm Keren-Lee Vale of Vale Financial Services. Welcome to my YouTube video. I'm here to explain business risk. You will notice I've got 3 circles on the board. The first circle is the business owner. The second circle is your business. And the third circle is you and your family. Currently in Auckland alone there are 1,600 registered financial advisors, and they will come to you and your family and they will talk to you about such things as life cover, trauma, total and permanent disability, income protections, and of course health insurance. 20% of those advisors will sometimes come into the business market and dabble in what they call key person covers. But as a business specialist, I know there is more to business insurance than key person covers. We've got to address such issues as ACC, as debt protection, as revenue, and also as fire in general. Most companies will have fire in general products. You will either be covering your stock, your plant, your machinery, your public liability, and sometimes professional indemnity. But when we're talking about ACC, the issue changes. The issue is do we have the right covers for our business in place with the ACC department? The next problem is debt. Now, debt should never ever stay behind after the partner has gone. So really the debt needs to be covered, and it needs to be covered by such products as life, trauma, and total and permanent disability. The same with key person covers. Again, the same issue arises: life, trauma, and total and permanent disability. However, when we're talking about revenue, we're talking about disability covers such as income protections and business expenses. So you can actually see there's a lot more to business insurance than there is just than key person. And this is called a preservation strategy. This is preserving the business in case of a short-term disability. As a business insurance specialist, I position myself up here, and there's only 5% of us that actually can work this market. And my concern is with you, the business owner. You could be a shareholder, you could be a partner, or you could be a director. And normally you would have some form of agreement in place. This could be a shareholders agreement, a partnership agreement, but they are all very standard. And what you'll have in the wordings in there is what's called a preemptive rights. When we are talking here, we are talking an exit strategy. We are talking about the rightful value in your business. So we've got a little bit of a problem here. We've got a preemptive rights that simply says that upon me exiting the business, I must offer my shares to the person that's staying in the business. So that's a little bit of a problem, and what we need to do is we need to put in place over top of this what's called a buy-sell deed. Now, we're not changing your agreement, this is just running alongside. But what it simply says is that the person that's staying in the business must pay the rightful market value for my shares, thus preserving your business value. So you can see there is something that we need to talk about straight away. Now, Also, what comes into play though with this buy-sell deed is they have a fund that also says that there is a funding mechanism in play. You just simply can't say, I can't afford it. It's written in the buy-sell agree that you must buy those shares. Now, how do you fund those shares? There are actually 4 ways that you can actually look at that. The first way, you could be one of the lucky 3% of New Zealanders that can just go into their pocket and say, here, I will buy your shares. But not very many of us are in that situation. The second way, we can go to a bank manager and simply say, okay, hang on, we now have a situation where one of us are having to exit the business. Can I take a loan out to buy your shares? Oh, the bank manager won't really like that much. So you'll probably be very, very lucky to get that. But if you are lucky to get it, it does actually have a problem here though, because what it does is it increases the debt on the business, thus putting more strain on the business financials. The third way is you can actually simply sell some assets. Now, if it's a quick transaction because one of the partners has died and you need to buy those shares and to pay out the family, you can actually put yourself into what's called a fire-sale situation. Now, that simply means that you've got to sell those assets quickly. And the statistics simply say you will either get the value of between 20 and 50%. So it's not really an ideal way of doing it. What I recommend is that you fund this through insurance. It is the most cost-effective way of covering your rightful value to your business. Now, you all know this accounting equation here. We've got the revenue coming into the business less the cost of goods sold equals the gross profit minus the business expenses equals the net profit. When we're talking about key person covers, we are talking about indemnity contracts. And they normally cover this lower half here, the business expenses or the net profit. But we have one problem there, is that an indemnity contract requires that you reprove your loss upon claim. Where I position myself is I look after this part here, the revenue. And I've got access to policies that are agreed value contracts that you know will pay out in this situation, that you know what will come into the business or come into pay for your rightful value of your company. Now, we've got one more little thing here. And this is what I suggest, is that there is an independent trustee here. Because what happens is when the insurance is paid out, that then goes to the trustee, who takes care of paying out the family, the estate, the rightful market value of your shares, but then also transfers the shares to the person that is still in the business. And this is what business risk is all about. And this is where you need to be sitting. So if you'd like some help on this with your business, I'm more than happy to help. You can actually find my contact details out on my Facebook under Vale Financial Services. Thank you for listening.